So good morning, active traders, and welcome to our Trading Week Ahead broadcast here for today's Saturday, March the 19th, 2022. I hope that this broadcast finds you all doing well. Now, the market's been quite the surprise rally the last Tuesday through Friday at least, and we're going to see where things go into the next week ahead. One thing I mentioned to my live room traders is that the market has gone up exactly this far each of the last 3 or 4 times before rolling over and going south. And as pattern day and swing traders, I want to see what the pattern looks like. So for example, the market went up this tall just recently. The last times it went up that far, it rolled down. Then it went up here, then it rolled down. Then it went up that far again and rolled down. Went up this far again and it rolled down. So the market may be due for a continuation, certainly, or may well reverse. The point is, now is a good time to put on a trading plan designed to capitalize on market volatility. Key support level I would use is just right under the Friday's low near 4,400. And as resistance, I'd use right above the 100 or the 200 SMA. There's the death cross, the 200 SMA up at the 4,500. So we'll use 4,400 as a support level. What that means is if the market goes back down under 4,400, you want to close out, or at least I'm going to close out open swing trades and stocks and go into my inverses. If the market gets over 4,500, I'll start scaling in. Also noteworthy is our VIX, down almost 10 percentage points on Friday. You can see the VIX dropped all the way down here. So the VIX is back under that 50 SMA. I'm still using 21, 22 as a 22 is kind of the key support level that professional traders have used on the VIX. So if the VIX stays above 22, there's still a possibility the market will drop. If the VIX gets under 22, then you want to have a long bias and trade more to the long side coming up. So let's take a look at some charts here. We'll start off with swing trading charts, and then we'll look at intraday charts. Before we continue, I just wanted do a quick reminder. And thanks to all of you who've been registering. A really big turnout for this one. The position sizing profits premium events coming up Wednesday. So just a quick commercial note here. It's at trademastery.com/position sizing. And what you get for that is you'll learn about how to scale mostly for swing trades, but we'll also cover intraday trade strategies. And that's coming up next Wednesday. You also get, from now until the end of the month in the live room, is a free bonus. So that's over 20 hours of training for just $97. And no ups, no extras, no subscriptions or anything like that. So do take a look at this page as we continue, or after today's broadcast. So if we take a look at some of these charts, what's in play? Now, Occidental Petroleum has been a big winner for our swing trading picks in the live room. OXY has been one of the many oil plays that have done extremely well lately. Halliburton's also done good. HAL, the ticker. What's neat about the oil plays is that they've had such explosive moves to the upside, and they've stayed up near their highs. So that's interesting. We'll see if they are able to hold their highs or if they retrace. Another play, ConocoPhillips, good play to the upside. So those are 3 strong directional long plays. Now, some of you had mentioned these charts last week, and they actually did really good. So I thought we'd bring these up and acknowledge your contributions. And thank you very much. These are charts that you folks, the attendees, had picked in this live event last week you'd asked me about. And I said they're all looking good, and they are. MULN, good for a bounce. We look at AGRO. Really nice breakout for an under $20 stock. It's just 11, AGRO. Now, what I like best about this chart is it's got a 45-degree angle breakout, and that's one of the best patterns out there. You can see it's right near 12. So we had a bearish engulfing right near 12, right? Just a quick announcement too. My colleague and I, Steve Nissen, will be doing a premium event on trading market volatility coming up Wednesday the 30th. So stay tuned for that as well. And one of the things we always like to look for is the combination of candles, the Eastern candle patterns with Western technicals. So if the Eastern candle pattern here is a bearish reversal with a bearish engulfing, a reversal with a bearish engulfing, what's the Western technical signal that I teach that would have told you guys to sell up here as well? Kind of the best of the East and the West. You know, From the east, we have bearish engulfing. So that's said to sell, or at least if it dropped down. And here we are at the, oh, hey, Nick, hey. It's a 12. So the whole number, remember, you like to sell right under whole numbers, or at least tighten up trailing stops as things get near whole numbers for day and swing trade. So you can see here, 12 is whole number resistance confirmed by bearish engulfing that formed as of right here. And the sell signal will be down in this region, okay? It'd be a good long to continue up over the 1260. Not a trade recommendation, but where I'll trade it, most likely. WPM, again, resistance at that 50. Remember what I teach you guys. And I just noticed this for the first time. I was looking at these charts because these patterns are so consistent. You want to sell something that has a 9 in it, whether it's for an intraday right under whole number or charts like this right under the multiple of 10, right? So remember, like I said, we go long over the decade value over the 40 and then sell the 49, and you don't buy right at the 50. So a multiple of 10 is a good place to sell something. Don't buy it right near that. That's usually a reversal place. I've taught thousands of traders to use that as a reversal place, so that's what you see. Another chart action, you can see MOS looks good. A good run from 40 to 62, and it broke the 60 whole number and held up above that, so that may be worth paying attention to the upcoming week ahead. And unlike the talking heads out there, I'm a real trader, so I talk using charts, not just tickers. So you can see visually the price action. Price action and careful risk management is all that matters. Anyway, so really good trend up in ADM. Now, some that I took a nibble at for swing trades are a couple of pot stocks. Canopy was up the last 3 days, as was Aurora Cannabis. I'll buy some Tilray next week as well. CGC, ACB bouncing. And in the may well be oversold but ready for a bounce category, DraftKings and Virgin Galactic, it's the SPCE space, the ticker. So DKNG, sports betting, if you look at the 1 year, you can see. It's really dropped heavily, but it's starting to bounce yet again. So whether it's a dead cat bounce or one that'll actually light up and go to the 28 or 30, that would be my exit target on my DraftKings swing, would be right under 30. So if I can double my money almost from here in the 1820, or get a 50% ROI from 20 to 30, that's good. Another good chart is SPCE. Let's see a question from Steve. For protective stops, as the stock declines, is it better to place them above the whole number or below the whole number? Well, it depends on the chart, but usually I'll use it right under the whole number, like 0.7 under a whole number. So if I were swing trading, I am swing trading this one long. If I were using a loose stop, I'd use something, say, right under the 6, like say 580 or so. That'd be the drop dead protective stop on this chart. Now, the neat thing about high volatility environments is that big swings that have sold off gradually, very strongly selling for a long time, often get a flurry of short squeeze, or people had shorted it on the way down. As soon as it starts to break multi-day highs, that's a red flag for shorts, and they start to cover their shorts. What that means to you as a trader, and to me as a trader, is that that's good opportunities often for bottom fishing, particularly when confirmed with large green candles in the lower right. So that's something to look for. Now let's change our coverage here to intraday. This was our stock market the last 2 days, really strong both on Thursday. We had the expected gap down on Friday yesterday. I sold my inverses, a lot of my inverses, most of my inverses on the gap up in them, because I knew the gaps tend to reverse in this market. That's another quick rider downer, or quick tip, is to look for gap reversals in our current market. And for those of you watching this on YouTube, I'm going to stop the recording right now. Do be sure to join us live in these Saturday webinars to get the good stuff, which comes up in the latter part of the broadcast. So I'm going to hit the stop the record button here. It's an incentive for people not to just watch on YouTube. So